Now that you understand how to use candle 2 and candle 3 closures, how to identify swing points, and how to use wicks and equilibrium, in this section we're going to focus on bringing all of that together in order for you to understand how to use this model effectively. In this section of the course, we're going to focus on identifying the bias, identifying relevant swing formations, CISD conformations, equilibrium boxes, and entry sequences. This section is going to tie everything together for you. Let us begin on identifying the bias of the market. The goal of the bias is to synchronize the lower time frame with the higher time frame. If the daily or 4-hour charts are bearish, you want to look for bearish lower time frame entry models on the 1-hour, 5-minute, or the 30-minute and 3-minute. If the daily or 4-hour charts are bullish, look for bullish lower time frame fractal models on the 1-hour, 5-minute, or 30-minute and 3-minute models. The weekly and daily and 4-hour are the time frames we use to identify the higher time frame bias. Each reversal in the market must form a swing point. This can be used to anticipate the direction via the higher time frames. So understanding how to identify these relevant swing points is the easiest way to understand the direction and the bias of the market. Once we see these swings developing, this can let us know there's a high probability of a reversal taking place. We can catch the reversal by trading candle number 3 or catch the continuation of that trend. The easiest days are the continuations, candle 3 and candle 4, in line with the daily chart. Candle 2 closures, looking to trade within candle 3 and within a good closure, candle 4, or candle 3 closure, looking to trade within candle 4. So if we get a candle 2 closure, you can trade candle 3 and candle 4. Otherwise, if you get a candle 3 closure, you're looking to trade candle number 4. So these are the swing point entries that we focus on. For the continuation closes, if looking for continuation, price will close outside of the previous bar. So you can see over here, we've got this bullish candle. Then the next candle closes above the previous high of the previous candle. This is letting us know there's continuation occurring. Bearish continuation is closure below the previous candle low. You can see this candle closing below the previous candle low. And the bullish continuation is closure above the previous candle high, where the body of the second candle closes above the high of the previous candle. Now for reversal closures, if looking for reversal, price will fail to close outside the previous bar. So you can see over here, we've got this big bearish candle, and then the next candle forms. It fails to displace or fails to close below the low of the previous candle. For our bullish reversal, closure above the previous candle low, and you can see fails to displace the previous candle low. For our bearish reversal, closure below the previous candle high. So you can see this is the high of the previous candle. Candle 2 fails to displace above the high of the previous candle, and this confirms for us our reversal closures. We can use equilibrium to pair with swings and closures on the daily chart when looking for continuation or reversals to occur. With price closing outside its previous bar and respecting the EQ, a continuation can be anticipated. So you can see over here, if we've got the second bullish candle closing outside the high of the previous candle, we can mark the high and the low of that candle, mark out the equilibrium level, and we can anticipate we want to enter our long position within the upper half of this 50% EQ level. In our bearish example, you can see our second candle closes below the low of the previous candle, and we can mark out the high and the low, and we look for our entry within the lower half of this EQ level. This is how it plays out in this bearish and bullish continuation. So what we will do to identify this bias is each candle will mark out the high and the low in the equilibrium, and they will anticipate the next candle will trade above that level. If it holds that level, the next candle we mark out the equilibrium, and we anticipate the next candle will hold that level until it invalidates, which can show that it is not respecting and possibly the market is turning against us. For our bearish example, we mark out the high and the low, the EQ level, and we want to see price respect the lower half of the EQ. If it does, we mark out that candle and we observe the next candle to also respect that lower half. This way we can track our trades and ensure they are moving in the direction we want them to move in. And if they change and invalidate the direction, it can be a possibility that the bias is changing. In situations where we do not get the continuation, for instance, this bearish candle, we mark out the high and low, and the next candle does not break above the high or the low, It's an inside bar kind of consolidating within the candle. On days like this, we do not do anything. We just simply wait for the next day's candle. And you can see the next day's candle closes outside the range of both of the previous candles. This can confirm to us a breakout is happening, and now we can potentially start looking for long positions. In our bearish example, you can see we've got this bullish candle, high and low in equilibrium. The next candle does not respect the high or the low of that equilibrium and just kind of closes in the range with this consolidation or this inside bar. And what we do is we wait for the next candle so we can get some more clarity. And you can see the next candle breaks the low of the previous candles and kind of forms within the lower half of this EQ section. This can confirm to us now there is in fact a bearish breakout to the downside. Here I am on the charts, and what I've simply done is I'm on a higher time frame. I've marked out the relevant swing levels. So I've marked out the high, you can see over here, swing high and swing low. So this is the extreme high and this is the extreme low of this range. And you can see price is kind of consolidating within this range. So we want to wait for price to actually tap into a low or a high. We always want to see it come to a relevant level and then form a swing in a relevant level. And that is where we want to look to take our entries. So let us wait and see. We want to see price come to the low of the range. It is not advised to trade within the consolidation or inside the range, but for this example, I will just show you so we can start learning how to figure out the bias of the market. So you can see in this example over here, we have a swing low being formed, and it is a candle to closure because you can see we've got the failure to displace from the previous candle, which is letting us know that we're actually looking for a long position right now. So let's see the next candle. And then we get the next candle. So then what we want to do is we want to measure the equilibrium of candle 2. And you can see it is respecting the upper half of that candle. So now we're looking for another long position. And we get another long position. Then we mark out the equilibrium of candle number 3. And you can see it is respecting that upper half. So we're looking for another bullish position. And you can see we get a failure to displace. So we get a swing being formed on the upper area. We mark it out, we can see it's a failure to displace. So now we're looking for a short position. So we mark out the high and low in the equilibrium of this candle, and you can see price is in the lower half. So now we're looking for a short position. You can see price is lower. So now we mark out candle number 3, the high and the low with the equilibrium, and we want to see price respect the lower half. But it does look like it is forming another swing point, and you can see we've got another failure to displace happening. So let us look. So now we're looking for a long position, and you can see we've got a break of the previous high of the candle. We can mark out the equilibrium of the previous candle, and now we want to see price respect this upper half. And you can see another long position. So we measure the high and the low of the previous candle. We want to see price respect this upper half, looking for our bullish. And we get another bullish. So we mark out this candle, high and low, and we want to see price respect the upper half. So by using this, we're able to track our trades. We're able to figure out what is it going to do next. You can see here we mark the high and the low. So we want to see price respect this upper half over here. But it looks like it is forming a swing point. You can see a swing point's being formed. Plus we've got a failure to displace happening. So potentially this could be our short position that could be happening. We wait for candle 2 to close first, and there you go. We get a nice short position. So we mark out the EQ of candle number 2, and we want to see price respect the lower half. Another short position, taking out all those lows. Wow. And there you go. So now we mark out the high and the low of this candle, and we want to see price respect the lower half. But you can see we've got a swing low being formed, and we've got a failure to displace happening over here. So now we can anticipate a long position. There you go. We get a nice long. We measure the equilibrium of candle 2, and we want to see price respect this upper half of candle 2 equilibrium over there. So we're looking for our long position. But now all of a sudden you can see we're getting a swing high being formed. We're getting a failure to displace. So this is a potential for a reversal. Let's wait for candle 2 to close, and there we go. We get a reversal occurring. We can mark out the EQ of this level, and we want to see it respect the upper half of this candle 2 closure. There you go. So now we're looking for a bearish. But now you can see we're getting another swing low being formed. So now we can see it's another failure to displace. Let me just clean this up a bit, looking a bit messy. So it's a little bit choppy, but you can see what's going on. We've also got a fair value gap here. We can mark out. You can see this is a fair value gap. Price is tapping into it. We've got a swing low, failure to displace. So we're looking for our long position. And you see we get a long position. Price takes off. So now what do we see? We see a swing high being formed, a failure to displace. So now we anticipate a short position. We can mark out candle 2 EQ. We want to see price trade in the lower half. If it does not respect that, you can see now it's going over the top. So it kind of looks like it's turning against us here. There you go. Now it pops into a bullish position. So bear in mind, we also have a fair value gap up here. So this is where we can anticipate a reversal will occur. You can see we've got a swing high being formed. We've got a failure to displace. So it's confirming a candle 2 closure. So now we anticipate a short position if the candle 2 closes in a failure to displace. It does not, you can see. So now this disqualifies our swing point that we're looking for. So we can continue with our long position. You can see we mark the high and the low. We want price to respect the upper half of the EQ. Now all of a sudden you can see we get a swing point being formed. Swing being formed. We get a failure to displace happening. So now we can anticipate a short position. But now look what's happening. We always want to wait for candle 2 closure to confirm it. So candle 2 closed in this kind of indecision, and then it broke above this level. So now we're still in a bit of an indecision phase. You can see we mark out that candle. It's still respecting the upper half, so we're looking for a long position. We get a swing high being formed. We can see there is a failure to displace. Okay, there's no failure to displace, so this is not a relevant swing. So we'll wait for more confirmation. It's always good to check for confirmation. You can see over here, price is breaking below the low of candle 2. So now it's a relevant candle 3 closure. If this candle 3 closes below the opening of candle 2, that will confirm for us a bearish sentiment. So we're looking for bearish movement now. And there you go. Bearish movement is happening. So we mark out the EQ of this previous candle, candle 3. We want to see price respect this upper half of the candle. And let's see what happens. Does not respect that, and you can see price engulfs the previous candle. So we're waiting now for relevant swing to be formed. So let's see what happens to the next candle. But bear in mind, guys, bear in mind we've got this swing high point over here. So this is a relevant key level we're looking to take a short. So let's see what happens. Price comes, taps into this level. So now the whole formula comes into play. We want to start looking for a swing point at a relevant level. So let's wait for the next candle. Okay, you can see we've got a swing being formed, failure to displace. So we want to see a candle 2 closure for confirmation to take our short position. And there you go, we get a candle 2 closure. So now we can measure the high and the low of candle 2. And we want to see candle 3 respect the lower half. It's kind of showing decision, and it does not respect. So it could be going for this other swing point. Can you see over here? We've got another swing high over here, or another relevant area to look for an entry. So let us observe if price is going to this level. There you go, price is tapping into that level. So now this is where we want to look for a swing failure to occur. You can see we've got a swing point being developed. And you can see we've got a candle 3 closure happening now. So we want to look for our short position. We can also mark out the equilibrium of the previous candle. And we want to see price respect of this region. And there you go, it looks like it's respecting it. A little bit of indecision. Another swing low being formed. Let's wait for confirmation. There you go, we get a nice break to the downside since it hit a key level. And there you go, we get a nice movement to the downside. And you can see over here we get opposing candle break. And we get another opposing candle break over here, which can also confirm an entry to the downside. So if we see price break this opposing candle, we can also look for another entry, short position. It does not do that. So it could be turning against us because you can see now price is breaking the opposing candle, and you can see. So we want to see price respect the upper half of that candle. You can see it's breaking below it, so it could be turning and invalidating that. But we're still waiting for this level. If price breaks below this level, and then we know there's going to be more downside. Okay, there's a swing low being formed and a failure to displace. So this can be letting us know now that price is potentially going to reverse. There you go, it reverses. So what we do is we mark out the EQ of this level, and we want to see price respect the upper half of this EQ. There we go. And look for our bullish entry. And there you go, nice bullish entry. And where does price go? Price comes and takes up this swing high. So you see, we mark out this relevant swing high point because we always want to mark out swing highs, and that's where we look for our swing points to develop. You can see we've got a swing point developing. We've got failure to displace happening. So now this is a great place to look for our short position. Let's see the next candle. And there you go. Oh, there you go. You can see we've got a swing low being formed now. It's a failure to displace. So we're looking for a long position if it's able to hold that failure to displace. If it breaks below it, it invalidates it. So it's holding that level. Is it going to break below that point? If it is, it's continuation to the downside. But right now it's holding this level. You see it breaks below it, and there you go, all the way to the downside. So our next key level is this relevant low. We will look to take another potential long. You can see here's another swing point developing. Failure to displace. So this can be potential for us to look for a long position. There you go. And then we get this massive wick, which usually shows retracement and reversal. So this could just be a retracement. We mark out the bearish opposing candle run over here. So if price broke that level, we can look to a continuation to the downside. It's almost at our key level over here. Zoom in. So this is at this level over here. We want to look for our long entry. But you can see we've also got a swing low developing, a failure to displace, which would have been an entry for long position. You can see we mark at equilibrium. Price is respecting the upper half. Let's see what happened next. So come to that level. There we go. So price taps into our swing low points. It forms a low. You can see we got a failure to displace. So now we're looking for a long position if we get this candle to closure. Candle to closes. There you go, that looks nice. And look at this, we get a candle to closure above the body of candle 1, which is a stronger confirmation. So this looks very good to take a long entry, key level. You can see we mark out the EQ of candle 2. It respects the upper half. Let's see, there we go. There we go. So there you go, guys. You can see how I'm using candle 2 closures, candle 3 closures, wick equilibrium, candle equilibrium. I'm using all of this combined together to be able to determine the bias of the market. But the key is you want to develop a swing point, either at a key level. Once you see the swing point developing at a key level, it's a very high probability to determine the bias of the market.